Saturday, August 24th, 2019, Maneco 64, home of alternative economics and contrarian views. Today I want to talk about the MOTY Award, M-O-T-Y Award, which stands for Moron of the Year. It was something started out by a precious metals guy, Adrian Douglas. Back in 2006, Adrian Douglas was very active with GATA. I think he testified at the CFTC hearings or SEC hearings. Well, actually it was CFTC hearings on the silver manipulation years ago. He has unfortunately passed away a few years ago from cancer. And he started out in 2006 a MOTY award for the most moronic comments about precious metals, gold and silver. And he did it for 4 years, 2006, 7, 8, and 9. 2006 winner was Simon Constable, TheStreet.com. 2007 was John Nadler, senior analyst at Kitco. 2008 was Dennis Gartman, editor of the Gartman Letter. And 2009 was Philip Clapwick, GFMS executive chairman. So why am I talking about this now? Well, I think I found arguably one of the most moronic statements about economics this year. And it comes from, guess who? Paul Krugman. And so who's Paul Krugman? Well, according to Wikipedia, Paul Robin Krugman is an American economist who is distinguished professor of economics of the Graduate Center of the City University of New York and a columnist for the New York Times. So school or tradition, neo-Keynesian economics, education, MIT, of course, Yale, JFK High School, Hopper College, award, Nobel Memorial Prize in Economic Sciences. So that's Paul Krugman. I think I've found the most moronic statement in economics this year. And maybe you'll agree with me, maybe not. If just comment below and tell me what you think. I'm going to go through this story where I found the moronic statement, in my opinion. I don't like to call people names, but this is just a bit of fun. After I look at this statement and present the MOTY Award to Paul Krugman for 2019, I will look at an important ratio, because after all, prices are but ratios between two commodities or two assets. And the one I'm going to look at is the Dow Gold ratio. I think that's one of the most important ratios to keep an eye on right now. Gold silver ratio is important as well, but I'm going to focus on the Dow Gold ratio. So back to the MOTY Award for 2019 in economics. So I guess it will be quite amazing because Paul Krugman has the award, Nobel Memorial Prize in Economic Science. And now he's getting the Moron of the Year Award in economics from Maneco 64. So here we go. The story is about Germany in the FT. The big read, it says, German economy. Germany rethinking the national ideology of balanced budgets. So for those of you who don't know, Germany is the only major country who's actually been running budget surpluses or balanced budgets for the last 6 years. And they've been paying down debt. And of course, there's a lot of complaint from other countries that Germany has to do more and that they're in the brink of recession. They need to start spending, but I think the Germans are holding firm. It's even in law that they should maintain a balanced budget. I think it was passed in 2009. We even have people like Emmanuel Macron, the president of France, who's a former Rothschild banker, right? And I read here from the article, it says, foreigners have long been bewildered by German fiscal policy. French President Emmanuel Macron last year criticized Germany's perpetual fetish for budget and trade surpluses that always occur at the expense of others. U.S. President Donald Trump has made similar attacks, although American criticism predated his arrival in the White House. One thing I would say, why is it okay for governments to run eternal deficits and run up insurmountable debts, while for individuals they need to keep like a tight budget in their household if they want to prosper? In the normal common sense world, the way to accumulate savings and wealth to be able to invest and try to become more prosperous is to spend less than you get in income, right? Every month. So why shouldn't it be the same for nations? Well, for these guys, these Keynesians, they believe that they know best, right? So let's go to the part of the article that really made me laugh. So here it is. This is in print here in the FT. Paul Krugman, the Nobel Prize-winning economist, suggested this week that the world had a Germany problem because of its ruinous obsession with debt. So that for me is MOTY all over. Ruinous obsession with debt. So Paul Krugman is actually saying that it's ruinous to actually save money and accumulate savings and pay off debt. He's actually saying that it's ruinous. So it's totally upside down. He goes on to say the solution is to increase borrowing and boost spending. He wrote in the New York Times, adding, but spend they won't. Well, good for the Germans. They're doing the right thing. The thing is that these Keynesian economists don't realize that running budget deficits, you only hurt the private economy because governments don't create any wealth. They have to extract it from the private sector. And for some reason, the Germans, they learned their lesson and they want to stick with it. So for me to say that it's a ruinous obsession to try to pay off debt, to work hard, to save, which is what the German government is trying to do for the German nation, it seems very moronic, and it's a huge candidate. It is my candidate for MOTY Award in Economics for 2019. There you go, Paul Krugman. Well, he's got a big award as well, doesn't he? Nobel Prize winning economist. So that's my MOTY of the year. Let's go now to the Dow Gold ratio. Why is that important? Well, if you go back to 1929, the US was under a full gold standard before 1933. So everything was priced ultimately in gold. So this is just a way of looking at the price of the Dow in gold ounces, right? And the other thing that I've talked about is historically this Dow Gold ratio. When paper assets get overvalued, this ratio is very high. And then when you have like the cleansing of the system, so to speak, that ratio moves towards 1, which means that you can buy one Dow Jones Industrial Index with 1 ounce of gold. So here's the historical chart going back 100 years. You can see the tops and the bottoms. And we had a big top in 99, 2000, around 45. We bottom in 2011 around just below 7, and since then we've been in a counter trend rally for the Dow in terms of gold ounces. But I think it's just a counter trend rally. I've said before in the past that for the system to balance out real tangible assets versus paper assets, we need to go towards 1 in that ratio. And in the short term, I've been looking at this head and shoulder formation, which is a negative formation. You can see this ratio topped last year at 22.5. And it's been forming head and shoulders. I spoke about it a couple of weeks ago, I think, that we needed to break through 16.5, which is the neckline. So this is where we are right now. We're right on that neckline on that trend line. It's around 16 and a half. We closed at 1667. So that's something to keep an eye on, to see how the system is going. I think the more things get, how can I say, volatile, and we saw that President Trump came out yesterday, even after the post-market closed, even after the futures closed, after 5 p.m. New York, he's waited for that close to come out with more tariffs on China. The Chinese, of course, fired a shot across the bow by putting tariffs on 75 billion of American goods earlier in the day. So things are not going well at all. We've got President Trump having a go at the Fed, even though in 2016 he said that Janet Yellen should be ashamed of herself for keeping interest rates so low, that rates should be a lot higher, that low rates were punishing savers and retirees who had worked all their lives. And now, of course, the guy that he nominated has been raising rates, and he's like not happy with it, right? He wants rates cut. So there's a lot of trouble out there, geopolitical, economic, trade. But I think in the end of the day, it's all to do with credit cycles, and I don't think anyone's going to be able to stop this credit bubble from correcting, because that's what they do, credit bubbles. People can't borrow and borrow forever. And maybe Germany will have a big surplus, and when things implode, they'll be able to, to get out much quicker than everyone else because they were prudent, right, Mr. Krugman? Or Dr. Krugman? You've got a PhD, I guess. So, MOTY of the Year award for Paul Krugman in economics. Dow Gold ratio. Let's keep an eye on this. It's getting very interesting. So, if you enjoyed this video, make sure you hit the like button. Subscribe to the channel if you haven't yet. Make sure you share this video far and wide so we can get the message across. Message of sound money, small government, free markets. That's what we stand for here at maneco 64. And you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great weekend. Take care. Bye.